Bing bong, the price is wrong. Let's do this. So 15-minute GME chart, you can see there's been a cross on the 50 above the 200 period. That's indicative of a positive trend coming up. There goes the wheel. Corey says he loves you. Thank you, Daniel Groves. Thank you, Corey. It's very much appreciated. I'll go to the book of records and I'll take note that the first wheel spin I have noticed has ended on Bing. Jamie. What is that orange one? What is it? Let's double check quickly. Here it's not got the same top. Hey, I can just pick whatever I want, but no, let's stick to what was it? What was it, my friend? There it is. We can see it here. The red is on chat neck. One chat neck. Nice. As you can see, there's a little red dot there at the top. That's a finger. It points at what it ends on. And here you can see it's chat neck. So excellent. Take note. Take note, chat. Positive trend indicative of this cross, golden cross, 15 minutes. I don't know how much attention you want to play to that, other than there is likely to be a little bit of flux as prices are still below the 200 on all the significant time frames and above the 50 on the lower one. So you've got a degree of support around this level that prices are at the minute. You would need to get above this 50 on the lower time frames to say that that trend was going to go off on one right now. You can see that you're also below the 18 period moving average. Having that on the lower term time frames is possible while still being bullish because you're at a low, and this is a series of higher lows with higher highs coming out of the bottom of what is perhaps a reversal pattern at the end of a downtrend. I can see this downtrend on the background of the chart here has been following this pattern. That is a tightening, falling wedge, which is representative of bullish price action. This suggests accumulation, and that by large accounts, when you get out this positive resolution of it, it constitutes a break from the first touch at the top to the first touch at the bottom. If you drop that down at the place where we first moved out of it, then you can see we've got a number of a distance to go yet before you can confirm that that's what's happened, though it would be something you would look to. Other than that, you would see how price action evolves, and it's got other levels horizontally that you would think about before there. This is the 236 is the first level price action needs to clear before you can definitively call any of this a low, and that comes in at 177 and 42, which we're below. We closed below. This week was below. So you need to open and close a significant time frame, pardon me, above that price if you were looking to move on again, though the next level above being above these moving averages at that point, you'd say your 200 period comes in at around 180, so there might be something that slows you down around there. And on the hourly time frame, you can see that you've got like pretty much a clean move up there, and the hourly one is the first significant time frame that you can speak to with regards to trend changing or maybe having rippled through to the macro picture. So here you've got this measured move and you're looking at the levels above it between here and there. The 382 comes in at 184, and if you capture the 200 period on the 30-minute time frame here at 181, then you'll likely be held down by this 382 Fibonacci level initially, or at least prices will tend to slow there, is quite likely. Get back on Banana Freeze. As you can tell what's in Banana Freeze, you win absolutely nothing other than a little bit of kudos. Chat, I hope you've necked your drinks and you just started and you had to neck it. So and then above there, should you get above that, you'd also be breaking your horizontal resistance level that came in at this wick high, which matched our breakdown level when we were at the top of this wedge before we went below and dropped outside of it at that last point before the turnaround. And so this has got a number of areas to look to. Again, when you go left again, you can see it was this low, touched it once, twice, that's 4, 2 on the top, 2 on the bottom, and then a retest on this wick 5 times. A number of, while getting there, it'll likely then provide us with a liquidity zone. It doesn't necessarily mean prices are going to stop, though they may hesitate. It could also act as black ice, and people were entering a trade there that didn't expect it to be bullish. There may also be stop losses from people that go short in and around that area. I certainly expect that that's how you would be playing it. And then if you recapture these areas and you're stepping up and you get this measured move, you'll go above 190, you'll likely wick up to around 197, touch this golden pocket, at which point I'd look for retests and areas of support. If we go back through these timelines and talk about those levels now with the 236, perhaps by the time you get there, your 200 period's actually at that on the 30-minute time frame. It may well be on the hourly, the first significant time frame where you can speak to trend. There is a period of flux until such times as you've captured the 50-period moving average and has a positive splay between the 18 exponential and the 55 exponential. At that point, until such times as you've opened and closed hourlies, with that picture being your current state of affairs and you're being above the 236, there will be a lot of price action that could go either direction. I expect it would do both and back again, pardon me. So measured move from this wedge, you can now see on the hourly time frame and going up slightly higher. There's a couple of other things on the go. This area where we're aiming for, the 200 period moving average on the hourly, is going to be in and about the measured move of this breakout from this wedge. That itself isn't the full extent of the move. There is a strong horizontal level at 195 plus we have this golden pocket of the Fibonacci, so getting there and getting above it are two different things. Though if you do the second, it's not much, you won't be looking at resistance here on 786 or the 886 Fibonacci line. Those will likely also only provide wicks until such times as you test support in and around this level at $197 to $200 would be likely due for a test, no matter how high you went beyond there. But there are other levels again, 216, and you come in at the C point of this Gartley, which is a harmonic pattern. It is highly reliable, and being able to add that to also good TA can do a lot for your trading, and that's why I'm one of the best at this in the business, other than perhaps Rocky Outcrop, who's on in for about 7.5 minutes. So until then, what can I tell you as well? Above the Z point, you've also got your A looking left. That comes in at a 1272 extension on this Fibonacci. It's the measurement from your low to your high of this big leg of price action. That horizontal and that Fibonacci are likely to be like both a magnet and, to some extent, resistance. It also meets at this point the downward sloping horizontal resistance, downward sloping diagonal resistance that could be said to be part of the isosceles triangle, equilateral triangle, pardon me, that price action is in at the minute. And so until such times as you break above there, you've got other things holding you down. And to say you've definitively broken out of this pattern and we're looking to put in the measured move that it comes with, then you'd have to look to break horizontals at around 255, 256, which is the 1618 and the full extension that you'd expect from perhaps this harmonic and this move in its entirety. At that point, when price action gets here, which I fully expect it to do so from way down here through all of these places for all of these reasons, testing those places where the mouse is stopping, it's a crayon really, and eventually reaching up at the 168, that'll be a higher high than our previous high. We'll check our RSI. People will wonder if it's divergent. The look back period a little too long ago. There will be people taking profit. It's also a liquidity zone. We'll likely at that point see a strong test of this breakout zone, this downward sloping, now hopefully support line, or alternatively the 1272 below us, depending on the strength of the move that took us here. At that point, you're going to look to these other indicators. You're going to say, has our RSI performed as it has done on the previous three signatures? It gave us this descending wedge, which ended up being a bullish accumulation pattern. Are we going to get something similar again? It's had it 3 times. It's had this price action narrative that I talked about with the breakout and the retest of the wedge, and then again of this equilateral triangle. you've got that even more clearly written down for you. It's like picture book style here on the RSI, and you can see that that would be confluent with your harmonic, with your Bulkowski, with your Fibonacci, and you'd see it on your RSI. You'd also see all those moves coming together and your picture being quite clear. You can also see on this leg of price action, which was lower, you had bullish divergence on your RSI and on your MACD. You've got the positive cross coming in at the D point. You've got a flux on the DMI and an ADX in the perfect position to represent a big change in trend. Everything on the hourly agrees. Here you can see on the 4 hour now, this is like very significant. It feels like a month if you've been trading cryptocurrency all day like I have. You can see that there's a number of other pictures that will evolve from this. Should you make it out of this triangle, we'll call it a pennant now, because as you can see, it comes at the top extension of a very long pole, and that makes this like a bull flag. And the measured move from that would take you to this ascending triangle. That's again another Bulkowski pattern, and if these things go to plan, as I expect them to do, you'll reach the top of that. It'll be the third time you've touched it recently. That'll give it significance. After 4 and 5 and 6 more touches, it'll get weaker. At one of those points, it'll break. The measured move from that triangle takes you up to this ascending triangle. At that point, prices are at $500. That is your all-time high. The place to buy it, if you're a doomslayer, is here at the D point, at the entry that you've been given so very obviously by the way price action has told you what market participants are going to do next. There aren't many charts that you'll get this good TA on, and then you zoom in, you can see, you don't zoom in, you zoom out on terms of time frame, scroll across to the daily. People might think 172 is significantly different from where we've been, but I'll tell you what, you get so ready and strap yourself in, not buckle up that all those months ago. It is only coming now when you'll feel the G's. You got the 200 period moving average has been tested. That's that countdown where they check at Houston to make sure that everything's going well before takeoff. You look to the guy that's responsible for checking that 200 period moving average, and you say, have we got a test of that on the daily and we're still in a positive uptrend on a logarithmic chart? And he says, yes mate, we're putting in higher lows even on lower time frames, and we've got bullish accumulation patterns up the wazoo. Then you think, okay, what does it look like? Weather's good, let's fucking roll the dice, let's spin the wheel. You buy at support, not a resistance. You get in now, you're the smart one. That's the GME and TA. Now we're going to go and quickly look at AMC, and then I'm going to bring Rocky in. But blow your socks off. So we're starting here on the daily time frame because we've made our way up. I'll push auto and get 0 more information. Screw out, Jamie. So again, similarly, you've got this picture. Let's take off these pictures, and so you can see the bigger picture, the wood for the trees, and as it were. You've got the lower highs, you've got the higher highs. You've got price action going up, testing a new level of resistance. At this point, it was your all-time high you were testing out. Then you came back, a period of accumulation at that zone. You broke through it, positively resolved. Similar pattern happening now. This one came with a significant low, lower high, and then on this tiny time frame, you get the same market psychology that GME is in at the minute, right? With the previous test of the body close highs, and then the period of accumulation with the cup and handle, the deeper retracing you might expect, the positive breakout from that area happening now on GME, then the huge move afterwards. The difference here is you look up and you can see, well, we've only just put in that low here. It's very different from that deep retrace here. Maybe there is slightly longer to go for this to evolve completely, though. Let's look at it with these drawings on. As soon as you can see these come on, you can see this is a Fibonacci here from the ultimate low to the ultimate high. Price action's resting above the 236. I'm not sure if you can get a clear picture of that here, but there it is, and it's in this bull flag / pennant. But it's not as obviously an ascending channel or an ascending triangle. It needs to put in another high to get there. And there goes the wheel of doom. I'll take note of where it lands. Similarly to GME, it's got Fibonacci levels that needs to beat. In terms of the macro side of things, it's above the 236. You can't even call this a local high, despite it being an all-time high. Isn't that amazing? A chicken and egg, and which came first? Well, in this sense, it skipped through time, just as we have. And if you didn't hear the start of this show, it's not a spaceship, it's a time machine. Go back to the beginning, watch it, and then catch up. That applies for anyone arriving at any point during this show. Watch the first 15, 20 minutes, then catch up with me wherever I am in this show. So here you've got this price action here. It could likely come in and put in some sort of high, a lower high on a longer time frame, or a wick high on then a body close slightly lower. That's what I'm saying, because I've been dictated such a narrative, such a positive narrative on GME, though it may well be, and I hesitate to point it out, that there should be some caution with respect to trading AMC. It could be a huge percentage move in the short term. That might not even happen right now because it hasn't got exactly the same characteristics. It's only put in 2 of these touches on this lower time frame and 2 on the top. Neither can be said to be real on the daily time frame yet until one has another. That could potentially be the bottom side, and it may well be the price action turns around here. On the RSI, you can see it's put in an equal low. Price action is higher. This is an uptrend. Does that continue? We'd want to test your previous high. In that case, that's confluent with the 618. That's in at around $50, 51 and change. That's what I'm looking to see on AMC. Looking at this daily time frame, 200 period moving average hasn't been tested yet. We have broken through and put in a new test, a new all-time high. The only thing that makes me think that maybe that 236 doesn't need a test on this time frame before this move continues is it has not retraced below the 236 of its ultimate Fibonacci, so you can't call it a local top. So you're not looking for lows, you're looking for continuation. That's what you're thinking, and it's true. On the 4-hour, here you've got a possible descending channel. You could have broken out to the bottom side of that. You had subsequently very bullish divergence that took you back in again. This supply line then became relevant at your 618 retrace from this high to your most recent low that we just talked about, that divergent one. Subsequently, you've put in a higher low, and how do we know what gives me confidence that this may be a low even if it is temporary? Well, you're holding the 236, and on the other side, when you talk about holding 236s on the macro time frame, well, here's it on the smaller one, on the 4-hour, on this part of the move. You're holding this 236 now, so you maybe have put in this low on this time frame and can say then this is a high. From that high, you've come down to the 236 and held it. That would be great. Go back up again. Why are you likely to go back up again? Well, in the first test of something that normally happens, and this is the place where you'd rebound to. It's also where your 200 period moving average is on the 4-hour. It's about to get across with the 50 period simple moving average, which will be a death cross on the 4-hour. That's likely to get tested by price action because that's what prices do. How do we know that? Because we've tested it so many times. We can rely on it, and you can rely on me. And here it is, the cover of the 382. That would be a very bullish reaction, and it would be a positive test, and a result there would be looking to go back up and test the 618 at 51.68. There's your big question. It comes in at 41.44. Does GME open and close 4-hour candles and then subsequent open above that area? Because if so, you're looking to a 618 test. That'll be up at around $50. Does it then put in a lower high? Does it come back for support? Likely it does. On the 4-hour time frame, you could think, well, there's a number of places it could test. If it puts in an ascending triangle, perhaps it comes back to the midline of it. Perhaps you would slap on your Bollinger Bands at this point and say, you broke out. Where does your basis line take you to? Where does that measure with your 50 period simple moving average? What's the 18 period exponential doing? What's the 21, the 55? Where are they looking? What's their splay? You might look at that retest and think about how the how your oscillators look. Here you can see on the 4-hour time frame, this low here had no momentum. It came in the face of a positive move. There was no strength behind this. It was only people taking profit, and mostly these orders that came in during this period of price action were buy orders. That was reflected in the RSI. Everything was just going up the whole time. That's what took you to your most recent high. This low that's come in on the higher time frames and didn't even get into the bearish control zone is now done its retest, followed this positive accumulate, this trend that comes with these lows, and seems to be turning around at this point, holding the 236. As we said, that's likely to happen on higher time frames and now on the 4 hour. Down at the 1 hour, you can see you've got this 200 period moving average out there shouting for being tested at exactly the same 41, 44 sort of area. The price action itself is going to need to put in a test. Everything's shouting for that. You can see that your RSI is accumulating. It needs to hold above the center line. If it does that and its own moving average, then price action will do the same thing and go to that 200. You've got a period of flux on your DMI. Your ADX represents that something may have just started, and it might have been after that bounce. And you can see on your MACD there's a clear picture of increasing momentum to the upside in the most recent part of this price action, even including this drop down here and a weaken into the downside. And so it looks as though price action may do something. At what point could you judge how things had happened? Well, now you're down at these lower time frames and you're back to this type of TA where you're looking at the detail and the granular things to measure and test your own hypothesis, both sides of the trade. And where on the hourly you can see price action on this part of the move, drawing a tiny Fibonacci from this high to your most recent low. Subsequently, you can see you're now tested this 0.5 continuation of the downward trend. Let's see, you need to recover 38.61 in the small time frames. It would be nice to do that today, but do you do it Monday and then does things go on? That's the first area to look to on the smaller term time frames. You could draw other Fibonacci's, but then you could do other things too. So we'll skip all of that and go in and see what sort of pattern does this remind you of. It looks like much lower on price action, either only as low or not as low on your RSI. That's bullishly divergent. You've got your cross on the MACD at the same time as that second blow came through, and a positive sign on your rocket crop DMI. You had such a strong move afterwards. That's a bullish wick on the end of it. That went through your 786 and through your 886 and decimated any likely resistance at this area. So you'll fucking kick the shit out of it if you get back there. And that 200 period test is likely to happen now. So freaking obvious. This will look like an inverted head and shoulders afterwards. A measured move off of it could potentially be there, or it could just be the neckline because of the state of that huge ass wick. You know, it could draw it from here. Let's see, don't you draw it from this, and you see that it's like a falling over crappy head and shoulders. You go back and see that's your neckline because it comes in line with this downward sloping resistance, which we take from this left shoulder and say there's your breakout zone up at the 1414 extension of $44, taking you up beyond that 200 period moving average through that area you decimated, and it looks like it might happen again. This is the sort of thing that if it starts moving, you get the fuck out of the way. And then you go down, look at it in 30 minutes, and you can say you're below your 200 period moving average. You've got a cross here. There's been sell signals given recently. Your RSI failed at the center line when that happened. This might be a high, and it comes down, puts in that most recent test of the 236 or a subsequent one of horizontal just below, and then a body close slightly above, and that coming at about 36. Should it go lower, then you're looking at your horizontal at 35.74, your previous low at 33.82. But does it look like that's happening? Not necessarily, certainly not in the higher time frames. Lower ones probably bounces off this 236, which is also the top of this bearish control zone. The RSI starts aiming for the center line, traces this downward sloping supply line, trying to cover the 382. 200 period moving average meets it on the 15 minute time frame. You're going to bounce along this channel between the 3.5 and the 236 until such times as you put in tests outside of this downward sloping supply line and above this 382. From here to there, it's just a hop, skip, and a jump. It's easy. It's going to happen there. You'll test the lower side of this bearish control zone with a test of this 236 and recovery. And that's the most that anyone on the downside is looking to get from it. And that's the TA on AMC and GME. In 2 minutes, I'm going to bring on Rocky, and he's going to give you his version of things. Aren't we all very, very lucky? And isn't AMC and GME looking good? You might even say it's gorgeous. Wow.